Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfield, and here are several things to pay attention to for this upcoming trading week, which is the week of October 10th. Now, just like last week, I'm going to start things off with earnings. Now, last week we had 33 companies reporting earnings. This week, it's no better. We've got 55 companies reporting. Kind of boring out there. Not a lot going on, specifically Monday and Tuesday. Big goose eggs, no major names. But it starts to heat up on Wednesday. We've got BlackRock, Delta Airlines, PepsiCo, and Infosys. On Thursday, you can see Wells Fargo, Wall Street Boots Alliance, Alcoa, Fastenal, and Taiwan Semiconductor. And then, drumroll please, the big daddy on Friday, JP Morgan, Citigroup, Morgan Stanley, US Bancorp, PNC Financial, and United Health Group. This is the motherlode of banks and financials starting off earnings season. It's the big kickoff. Now, why is it so important? Well, certainly earnings season kickoff with some of the major names is always exciting. However, financials historically have done very well when you have a rising rate environment. Banks can lend out money at higher rates and earn greater yield. However, we haven't quite seen that. Financials have been really ugly, as has the overall market. So I'm kind of eager to see how these financial firms are going to report. Are the earnings beating expectations, or are they missing expectations? And really, how does that set the tone for our earnings season going forward? But it's going to be a lot of fireworks. Over the past couple of months, we've been looking not at earnings per se, but a lot of fundamental macroeconomic data. Now we can really dive into what companies are doing, because let's be honest, people are buying stocks because of earnings. Let's get those earnings that yield and earn some income on our stock holdings. See if that pans out. All right, let's take it a little bit deeper and dive into some macroeconomic pieces. We talked about last week's number with core PCE price index, which created some waves. Well, we also have two pieces of inflation data happening this week. Producer price index is happening Wednesday at 8:30 a.m. Eastern Standard Time. As you can see, the previous two readings have been below zero, which is a great sign if you're thinking inflation's out of control, because it's showing you a contraction in inflation. Remember, PPI is producer price index, and it represents the cost for manufacturers to manufacture a specific basket of goods and services. Of course, that's what it costs them to make it. The CPI number, which comes out the following day on Thursday at 8:30 a.m. Eastern Standard Time, is consumer price index, and that's what you and I pay for that basket of goods and services. And while it's declined significantly, it's still above zero, showing an increase in prices. Now, this next reading on our CPI and our PPI number are very important, because that, coupled with last week's core PCE price index numbers, will give the economy and economists and financial markets, institutions, etc., a better understanding of where we stand with inflation and how Jerome Powell and his team may start to attack that. We'll also see some action on the Fed funds futures next week as that economic data rolls in and futures traders start to position themselves accordingly. So very exciting stuff happening on Wednesday and Thursday of next week with regards to inflation. But I've got one more thing to talk about, and we mentioned this with Jerome Powell. He said, essentially, he wants to curb demand. He wants to slow down spending, which is what? That's retail sales. Yeah, here's our retail sales chart. You can see on the hard red edge, it's been slowly drifting down. And if we get down below that zero mark, that means we're not spending. It means the economy's not growing. And if the economy's not growing, and we're not spending money, that means layoffs are coming down the line. If layoffs happen, then this starts to get a little bit deeper of a downward spiral and could put some serious negative pressure on our market. So ideally, we want retail sales numbers to be very positive. However, Jerome Powell said he's going to curb demand. He wants us to not spend as much money because that's what's been causing inflation. You're like, wait a minute, is this the chicken or the egg kind of argument here with retail sales? Don't know which way it's going to go. However, I do know that at that time on Friday, 8:30 a.m. Eastern Standard Time, it's going to be a wild swing in the market. There's a lot of expectation about these numbers. And whether we come in right in line with expectations, we exceed expectations, or we miss, there will always be this euphoria or fear that runs along with those announcements and creates surges in the market, both up and down. Best to be in a defensive posture at that time, right around 8:30. The good news is the equity markets aren't open yet because they open at 9:30 Eastern Standard Time, but you'll get an idea as to how those markets will open up based off those retail sales numbers. That, my friends, is your Monday Morning Must Knows. We'll see you next week.